What is going on, traders? Welcome back to the Traveling Trader. In this video, we will be talking about my top 3 SPACs that I'm looking at right now. I'll be going over each one and why I think they are lucrative at their current price point. You definitely will want to stick around because I will also be giving you my trade ideas, showing you how I'm trading these SPACs. I'm not just buying and holding them. There are warrants, there are stock options, etc. There are many different ways that we can leverage our gains on these SPACs. So let us get right into it. If you guys are in the trading group, you know that we did put in trades on a few SPACs recently. We played Skills, Segro, SBE, APXT. Now, I did a video on the life cycle of SPACs and when is the perfect time to get in. And basically, there are a few major phases of SPACs. Just to get into it really quick, there is the pre-merger part, right, where the SPAC is trading near the $10 default. In very few exceptional cases, they're $20, like Bill Ackman's SPAC is starting at $20, but most of them start at $10. So you have the default pricing, and then you have the pre-merger announcement phase where it is just stagnating between $10, could go a little bit over, a little bit under. You have a pre-merger announcement phase where the stock can hover up just above or just below $10, right? There's little incentive for the SPAC to go below $10 because those shares are redeemable from the company at $10 a share. That is part of the SPAC agreement. So very little incentive for it to go below $10 pre-merger. And then you have the announcement phase where after a merger is announced, the stock can run up $2 to $5, usually somewhere in that range. We tend to see a retracement after that. And then when the merger goes through, we tend to see a price jump. And this can vary depending on what the company is. So a company like Laser, for instance, or Luminar Technologies, this used to be a SPAC and the deal just went through. This one went all the way up to near $50. Skills, which we traded last week, this one went up almost to $24, and we traded it at the retest of this 21 EMA here. If you want access to all of our trades, by the way, link is in the description below where I send all of this stuff out. You will have access to my portfolios as well as every move that I am currently making. All right, so first SPAC on the list is Gores Holding 4, or as I like to call it, GHIV. GHIV is the ticker symbol. This is currently trading at below $11. It's around $10.72. Remember, I said that $10 is the default pricing, and there's little incentive for it to go below $10. It might go a few cents below in the interim. Now, when it comes to SPACs, you don't bet against two people, Chamath Palihapitiya, and the other one is Alec Gores. Now, GIV recently announced that they are doing a merger with UWM, which is United Wholesale Mortgage. Now, this is the number 2 mortgage lender in the company right after Rocket Mortgage. This will in fact be the largest SPAC merger in history at just over $16 billion. Now, if you're not familiar with Alex Gore's track record with SPACs, here are just a few companies. Twinkie, right, which is Hostess Brands, basically. This one is currently trading at almost $14, but it went to a high of almost $17. So 70% if you bought it at around $10. He also did Vera Mobility Corp, and this one is also trading near $14 with a high of also almost $17, which is, again, would have been a 70% if you held it till the max of 17 and ended up selling it at the top. Either way, we're talking about potential here. So there is a 30 to 70% potential based on those last two companies. And yes, Laser or Luminar Technologies, which you guys might not have known, is tied to Alec Gores, the same guy. This one went all the way up to, as I said at the beginning of the video, almost $50, 47 and change. So this was almost a 400% gain from the default pricing. So with that said, what am I expecting for GIV? Well, I'm not really, targeting a certain price point. However, what I want to see is the likelihood of a deal happening. Now, I did a little bit of research about the likelihood of SPAC deals go through, and there seems to be a positive correlation between the size of the SPAC and the likelihood that it will go through. There is this really great article by Seeking Alpha that did some research on big SPACs or SPACs with a large amount of money. And they said the likelihood of these SPACs finding a deal within the 2-year period is 100%. So there's definitely a difference between a SPAC that has at least $500 million in their trust accounts and some of these smaller SPACs that ended up being mostly failures. So how am I trading GHIV? Well, in this case, this is called a bearish engulfing candle, which means we might see some more downside, maybe to the 21 EMA, which is around 1030, or it can even go back to the $10 default pricing. Either way, the way that I'm going to be trading GHIV is actually through a cash covered put. So in this case, I'm going to most likely be selling the August 2021 $10 put for $3.30. This is $330 per put contract that I'm selling, which will lower my cost basis to $6.70. Because remember, when you are selling the cash covered put, what you're basically saying is if the price hits $10 or below, I'm willing to buy 100 shares per contract of that stock. But in this case, your cost basis is not $10. You already collected $3.30 for the contract. So your cost basis is actually $6.70. or $10 minus $3.30. This to me is a no-brainer. Like I said, GHIV already has a great track record with taking companies public and seeing that merger through. So they already announced an intention to merge with UWM, and it will most likely go through based on previous history. Now, obviously, everything comes with a risk, so measure your risk accordingly. It doesn't mean I'm going all in on this. Most of my portfolio is still made up of blue chip stocks that I bought on the dip. And again, if you want access to my whole portfolio, link is in the description below. You'll be able to see every single thing that I'm holding. But most of my portfolio is made up of stocks like Apple, Tesla, Microsoft, etc., Amazon. So I'm not devoting a lot of my portfolio on this, but I'm willing to take a measured risk because $6.70 for a SPAC that will most likely go public and a SPAC management team that has a great track record of taking companies public, I'm willing to take this bet here. Now, if you're not trading options or you don't have the capital for 100 shares, that's fine. In my view, buying GHIV and sitting on it at around $10 or just under $11, anywhere in between $10 and $11 is a good bet for the long term, right? Don't expect this to moon right after you see this video. It might take months for the merger to go through. It is sometime in 2021. All right, let us talk about SPAC number 2. SPAC number 2 that I'm looking at to trade right now is Goldman Sachs Acquisition Holdings Corp. 2. Now, along with the research that says that the bigger the SPAC is, the more likely it is to actually finish the merger, the same is true for SPACs that are actually backed by big banks. So the Churchill Capital SPACs are backed by Credit Suisse. The Goldman Sachs Acquisition Holdings are backed by, obviously, Goldman Sachs. And there are also some that are going to be backed by BlackRock, etc. So the ones that are actually backed by big banks also have a high likelihood of seeing the merger through. So Goldman Sachs Acquisition Company currently trading at around $10.58, also resting on the 21 EMA, which is an important support level for most of these momentum stocks. And as you can see by the name Goldman Sachs Acquisition Holdings 2, well, what was the first one? The first one was actually a company that turned into Vertiv Holdings. They took Vertiv Holdings public through a reverse merger. Now, this couldn't happen at a worse time because they did it right around February, the week of February 18th, right around there. And obviously that was pre-pandemic crash. So the minute that it went public, it was susceptible to, or it was a victim of the pandemic crash, right? But before that, it went up to $13 and it's currently trading at $20. So you would have 2x your money if you got in at the $10 default pricing. It's so funny how these SPACs look unattractive around the default pricing, but the minute that these SPACs go to 13 or 14 bucks, they become on everybody's radar. There's this hilarious meme off of, I think I got this from Wall Street Bets, but it shows the entry door of the SPAC at 10.50 being empty, and then once a SPAC is $13, there's a line out the door. This is freaking hilarious, but also true, which makes it funny. Golden rule in life, you can be mean if you're funny. All right, so Goldman Sachs, who are they purported to be merging with? Well, as of now, there isn't any word, but we do know that the SPAC has holdings between $700 million and $1 billion, which makes it a huge SPAC. Again, it checks off two boxes. It's backed by Goldman Sachs, and it is a large SPAC, one that has more than $500 million in holdings, which to me solidifies my reason for holding it long term. Now, these SPACs generally have 2 years to make a deal, so keep that in mind, right? These SPACs have 2 years to make a deal, so you could be holding these for a long time until a deal is announced. But like I said, we tend to see a pre-merger announcement run-up after a merger is announced, and we know which company they're going to take public. We tend to see a run-up to about, $13, $14 usually, at which point you could set a trailing stop limit order, and that way, if it starts retracing, then you can exit for profit, and then we can re-enter before the actual actual merger date. We actually did this recently with CIIC. This is something that I did send in the trade alerts. When we did retrace to the 21 EMA, we had an 86% run up thereafter, and then also set a trailing stop limit so that on this retracement we get to book profits. But you see this is after it announced that it was merging with a rival, and then the hype dies off and people start taking profits, and we see a retracement, and then there is another rally either after the merger is completed or in anticipation of the merger being completed. All right, SPAC number 3 on our list is Churchill Capital Core 2. Now we know that they announced they are going to be taking Skillsoft public, and this is the deals is looking to actually go through in January 2021. However, the SPAC is currently trading at around $10.18, very near the default pricing. This is likely because the market isn't that excited about Skillsoft and about a Skillsoft merger. However, at $10, this is something that I'm happy to get into, or $10.18. Now, Churchill does have kind of a choppy track record, meaning that it does have a few SPACs that are out at the moment, but so far there is one that actually completed its merger, and that is Clarivate, which is currently trading at $30, so 3x your money if you got in at the $10 pricing. So with that said, yes, I'm also not that excited about Skillsoft, and Skillsoft as a company, it's known to have solvency issues. So I'm definitely not looking to hold this one long term, but at $10.18, I'm okay parking some money here for at least a 30% gain if we get to $13 or higher. Like I said, the merger is happening in January 2021. So far, that's what we know about it. Now, this SPAC is also $700 million in size, so it ticks off that box of being a large SPAC that will likely see the deal go through. Now, if you want to engage in a little bit more risk for higher returns on something like CCX, something that you might not be that excited about for the long term, look at CCX warrants, right? So warrants are basically like options, but instead of it being a contract between you and another trader, warrants are a contract between you and the company, in this case, the SPAC, Churchill Capital Core 2. It gives you the right to buy shares of Churchill Capital at $11.50, but I don't care about that. All I'm looking to do is ride the price of Churchill Capital Core 2 up, and therefore the warrants in value will go up. Right now they're trading at $1.63. So if you bought these warrants, for instance, and they just got to their previous pricing of around $3, you're making 84%, which is a lot more than you can make from a similar type of move in the underlying stock. But keep in mind that warrants are more risky, because if the deal falls through, then the warrants can just evaporate and your money, your initial investment can be gone. So size accordingly. It's very different than the shares of these SPACs. When you're trading shares of the SPACs, they owe you $10 per share if the deal doesn't go through. Legally, they are obligated to give you back your investment because they hold those investments in sort of like an escrow account. But with warrants, they aren't obligated to pay you anything if the deal goes through. So, you know, you are buying them for $1.63, but if the deal goes through, if the deal doesn't go through, then you might not see any of that money back. And when we're very close to that merger date of January 2021, now it could be delayed in the same way that LCA was delayed, but keep in mind that these are a lot more risky, so size accordingly, even though you can make a lot more money than you can from holding the stock. And me personally, I'm going to be doing a mix of the stock and the warrants. Anyway, that is it for this video. If you got anything out of this video, leave it a big fat thumbs up just like this. Leave it in the comment section below. Let me know what SPACs you're currently trading, and if you're looking at any of these SPACs that you see here below. Sign up if you want access to the trade alerts and my portfolios, where you get transparency on every move that I'm making and what my actual pandemic portfolio looks like. We have a group of over 1,500 traders where we discuss trades, strategies, etc. all day. Look out for my options trading course coming in maybe January or February 2021. There's a link below for early bird access. So sign up if you want a hefty discount on an early bird special for my options course. It's going to be a full-on options course from A to Z. We'll be talking about everything from buying simple calls to trading iron condors, how to roll your options on Robinhood, how to trade iron condors on Robinhood, how to do covered calls, cash secured puts, etc. It's going to run the gamut. Subscribe to the channel, hit that notification bell. Stay safe out there, traders. Peace.